Hello, traders. It's 8:04 a.m. Chicago time on Wednesday, the 4th of November, 2020, the day after the U.S. election, and with results unknown still. This is episode number 1872. Thanks for joining me this morning after a long night last night. In fact, it was so long, I was up till 2:30 a.m. Chicago time, just really rough sleep. I'm a little bit draggy this morning. Feels like a hangover, but I'm glad we did the webcast yesterday. Huge turnout. We basically went limit up on the number of attendees during the webcast, and people came in and out. There was a fair amount of rotation. It was a 4-hour webcast, and I feel like it was successful. Just a quick word on this. I got several emails and a couple direct messages saying, "Why do you do this? Like, you're a trader. Why are you broadcasting and bringing panelists on and stuff?" Essentially, the answer to this is very simple. It's one thing to sit here in a dark room and just stare at my screens and trade. It's another thing to be a part of a trading community and to engage with other traders. I am looking to learn. As soon as I stop learning, I become a dinosaur, and I refuse to become a dinosaur as a trader. And to me, if I'm not engaging with traders, since I'm not in an environment, with an office in the board of trade, running into traders at series or sellers, uh, uh, and just bumping into others, from other prop rooms and things like that. The only venue I have as a trader is what you see here. These trader bites, these impromptus, webcast, convergent trading, edge clear. This is what's important to me. And so this is why I do this. This is why I make this. This is why I'm making this effort, and it'll continue to be this way as long as I can sustain it. So, uh, everybody you saw yesterday are people that I know from online. The panelists I know from online. They're head traders at Convergent. The guys from EdgeClear, David Klotz is a guy I interact with a whole lot with Philip Capital. These are people I want to know more about or get information from, and as I'm doing that, I'm sharing that with you. So that's what that's all about. I'm not attempting to start a podcast. I'm not attempting to start a TV show. Not attempting any of that. I'm doing it for my own purposes, and oh, the cat has something to say, and I'm doing that, and I'm offering it to you because it doesn't take much for me to offer this to you. So this is what it's for. The intention goes no further than that. I'm all about community, and that's what I'm creating with these webcasts, trader bites, and so on. Anyway, back to the program. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Risk on sentiment, pretty hard risk on sentiment on the NASDAQ, up 3.5%, 394 points. That's the leader today. Crude taking a bit of a pop, up 2.68% on the December contract, up $1.03, and the S&P is gapping higher. We have plus 53.50 versus yesterday's settlement, trading at 34.15. Remember that 34.20 and 34.31 are important areas. The high of the night is 34.32 in the S&Ps. The bonds are higher, 2 handles and 16 ticks. That's really surprising. Allocation is clearly to risk this morning. And so that's where we stand. The Russell dragging its behind, down 28.8 points or 1.79%. The small cap seeing rotation out of the small caps in the overnight session and into the techs, and that's where we stand. Gold is off 50 cents, trading at 1909.90, and that's that. So that's where we stand this morning. In terms of what's scheduled in earnings, we have Qualcomm, QCOM, expected after the close. We're looking for $1.17 and 5.94 billion. The economic calendar shows that we got ADP this morning, which was a big miss, 365,000 versus 590 expected. They revised the prior from 749 to 753, I believe. The balance of trade came in worse at 63.9 deficit versus 63.1. Also, the United States is issuing a record number of paper amount of paper for its upcoming auction. Got to keep that credit card balance going. But today we do get quite a few numbers. We get market PMI, composite and services. 15 minutes after the open, we get ISM non-manufacturing. At 10 o'clock, we do get crude oil stocks today at 10:30 Eastern, and that wraps up the day. Don't forget that throughout the day, Wisconsin is leaning more towards Biden. That's the latest that I read. It's a fluid situation today. It's really important to have news on, or maybe not. Maybe you're just everything is in price, as Brian Shannon, Alpha Trend said. But I'm keeping an eye on the news and just wanting to see how things play out and how the market reacts. I have no idea what the market's reacting to. To be honest, I'd be a liar if I told you, oh yeah, as the numbers lean towards Trump, the market's going to do this. I have no idea. It seems to go higher or lower with news for both candidates or against both candidates. So hard to say. Anyway, let's move into the review segment for yesterday's stuff. Yesterday, the key figures above were, remember, we opened yesterday in the 30s, went down to 31 in the S&Ps, and then shot up to 83. The key figures yesterday were 40, 50, as you see here, 40, 50, 60, 75, 85, 88. We stopped at 83 and then turned over and became balanced. The open really had a very small open auction and then shot straight up. Did not catch that move. Tendex did in the head trader channel on Convergent Trading, and then from there it just kind of pulled back and has gone and went sideways. Yesterday's scenarios didn't really play out. Here's what we saw yesterday. This, just for reference, is a PNF chart. It's what I have on during the day, either a 4-tick Renko or PNF. And so that's what we saw here. We have a small gap up, pulled back to 31.50, and then we shot up. We had this nice impulse higher, and then we continued to rotate higher, and we pushed all the way up to 82.75. The first tag was 80.75, comes back, makes this nice, that starts to lean higher here, and then finally pushes through the IB. We have an IB break, range extension, consolidation near the high. It looks to me like it's likely to push through and get into that 88 naked point of control and continue higher, but it's unable, and it rotates back down to VWAP. This was another trade opportunity here. VWAP, I was looking for a test of about 74, got to 72, failed over, and then from here on out, I wasn't paying attention to the market anymore. I was tied with other things. It was in the afternoon. In the afternoon, we ran up back to the IB, tagged the IB by 2 ticks right here, and then just sold off into the close. Sold right off into the close. From there, it's quite a mess. The overnight session gets bullish right away. Here are the 2 bars in between the 3:30 Central close and the 4 p.m. session close, pushing back into the 62. If you recall, 33.60 is big in this area, and 40 is big in this area. And so it went to 60. The point of control being 62 yesterday is not surprising. Yesterday was really a pretty fat profile, quite a bit of balance, a pretty decent volume, 1.38 million versus 1.1. And then from there, we just had this kind of back and forth. The area that we wanted to see whether the market would hold or not is around 32 in here, and it pulled back a little bit higher, went all the way up, poke through, and then we had this launching point. Really hard to make heads or tails of yesterday's auction. We have three distributions, very clear. Three distributions. The market is actively discovering price in the overnight session. The 34, 32, 25, this 34.30 area is quite important. It includes last week's high, which is 34.30, and we're currently trading at 34.07. The volume is outstanding, 1.02 million contracts versus the expected 200,000 recently. So about 5 times the volume. We have a lot of rotations in here. If you use any rotational versus time-based bars, you have a chart that's quite busy. And so it's expected to carry over. What do we take from this? It's expected to carry over into today's session. I'm expecting continued volatility. The market is really playing both sides here and pushing. The important thing to note, though, is that we're opening in a gap higher above the 3,400 with a lot of structure underneath, right? We've got just quite a bit of structure to deal with in terms of the profile and price action. Notice that although we're higher, the delta is really slightly negative. The overnight inventory is relatively mixed, leaning long into the open here. And it's really a mishmash and a mix of inputs for today's session. Today is more, for me, is more of a looking for consolidations, trapped longs or shorts, and scalping those rather than looking for structured trades, because I know that somebody's going to throw a grenade into the market with the news that's coming out, with the count that's coming out. There are still some key states remaining. I used this map yesterday, and I'll throw it up here today. Hold on. I'm keeping an eye on this site here. This is run by the AP, and overall, I'm keeping an eye on what's going on. There are states that are leaning one way or another. Biden still has a chance. Trump looked very strong last night. In fact, he came out and gave a speech. To those of you who are up that late, I watched it in real time, where he declared that there's just no way for Biden to catch up, and that there's a victory. And he ended the discussion with, if something goes on with the count and the fact that the Democrats are robbing the public of a fair election, even though he had already declared victory, he said that he is going to fiercely fight this in the courts. What does that mean to us? This is not a political discussion, although many of you will take it that way. It seems I've got experience with that. I'll get DMs telling me to shut up about the politics. Don't really care. But this impacts us because it creates uncertainty for the market, and the market does not like uncertainty. The popular vote goes to Biden. We'll probably continue to go to Biden, and we'll see. And we'll see how this thing shakes out. The fact is, it's neck and neck. The fact is, the Democrats expected a blue wave. Expected to sweep this election, or we're talking about sweeping the election not only for the White House but for the Senate as well. And a lot of old characters remain in place, Lindsey Graham, Mitch McConnell, and so on. So it's not really working out the way the Democrats had expected so far. It's really a country divided and a very, very highly contested election so far. And that's going to impact how we trade. If we had a sweep, we would be done with this thing this morning, but that's not what's going on. And the different states are going to continue to count ballots for at least the next couple of days. Nevada has declared that it's not going to give a final count until Thursday, tomorrow, and that's where things stand. Look, I'm not talking politics here. I'm talking fact, and the market is going to continue to have this volatility, and there's going to be a lot of positioning. And because we have volatility, the options are going to take that into account. The traders in the option market are going to need to put on positions in either equities or in futures to hedge that additional volatility. And so we'll continue to see this kind of stop run type of trading that we've been seeing lately. Here's what the order flow looks like. Same thing as we've been seeing a lot of streaky kind of, the heat map is quite streaky, but it's also quite um, quite spiky. Look at these spikes here. See that spike? Just big delta, big stop run, and then it comes right back to where it came from. And we're seeing that quite a bit. Look at these collisions, and then it comes right back. If you're someone who's scalping order flow and is lifting the offer and just looking for a break and a stop run, very often these trades are just are getting smashed back into your face, and you just need to be sure to understand that there's a lot that's in play here. There are quite a few spikes and dips throughout last night's session. There's another one there. The order flow is just a complete mess, to be honest with you. It just looks to me like it's a good time to be patient. Let's take a look at what's expected for today and let you guys move on. So, what are we looking for today? It's really a difficult one to create a solid plan for, but just like generals in the field at wartime, we still can't go out there and send our contracts to fight for us without giving them some sort of a plan, and that's why we do this. It's to me, we're opening up in a gap, and we have this high volume. We have this really large, really large kind of sweeps back and forth. We're talking about 100-point moves up and down. To me, this is likely to be a continuation. The inventory is mostly long. I'm suspecting that with the test of the high, lower high, I'm suspecting that we are likely to move back to the overnight point of control. The overnight point of control down into the 3385 area. I'm looking for it to break through this 400. Let me turn on my stock zones. I'm looking for it to break through this 3400 area, come back in, and likely test the 8385 area right down here initially. So I'm looking for this area to be a magnet. From here, probably a dip, consolidate, come back out, and hold steady. And who knows what is going to come out of Michigan and Wisconsin this morning, which will likely cause us to break out. The important areas: 30 up here, 50 above there. We're looking at 70 as well. I'm not just throwing up odd numbers, 20 points apart. They just happen to be that way. 70 and 80. These are the big areas up top, or significant areas up top. And then below us, we're looking at the 83 from yesterday, 85. It is the point of control overnight. 85. Ooh, this is becoming messy. And then below there, again, the 60. Below there, the 40. Below there, I know this sounds really odd, but the 30. The 30, I know I'm talking even numbers, but this is just how it's working out. The 30, a break and hold below the 30 is likely to drive us down. And once we start driving down, we're looking at 3302, 3302, then 3293 down here, 9302. And that's how things are likely to shake out. And then from there, it's likely to be a runner all the way down to 3254 down here. This is how the map kind of plays out, and these are the key areas I'd be looking at for reactions. This is scenario one. I've made a mess of this screen here. This is scenario one. Scenario two. Scenario two is an open auction that dips down and then gets an impulse higher. It's just not able to push into the 83. I mean, if we don't get any movement down, then we are likely to not. If we don't get into the 83, we're likely to push this 30 area, 34, 30 area, and start walking to 50, 70, and so on, 80, and then consolidate up here and hold steady. The fact is, we are breaking the one. We're starting to one-time frame up. So yesterday broke the one-time framing down, and then today we'll likely initiate one-time framing up with a higher low. As long as we hold this 30 area, and if we do so, then we are likely to start pushing all the way up to 3490, 3500 over the next couple of days. That's what we're looking at. It is a gap. Scenario three is an open test up, drive down, as you would normally expect the auction to break higher and then revert back to the prior day's range. I won't draw that on here. It's just too crowded. Anyway, 4 minutes to the open. Good luck today, and I'll catch you tomorrow. Mind your risk today. Be very, very cautious about what you're putting out there, and good luck. Take care.